Some new top stock picks fresh for your consideration. Let's start with Kevin Cook, who has an interesting software company.
Nuance Communications. I'm looking at a potential turnaround story here as this number 5 ranked stock for the past year has flipped to a number 1 rank. Wow. And this is, they make the speech recognition and voice recognition software. It was talked about a lot at CES last month in terms of the connected car, because they're doing stuff, you know, to make your car work for you while you're driving, so you're not, you don't have the issue of distracted driving. They have a big segment in healthcare where they're helping physicians and other healthcare workers record the things they need to record in real time and have that documented in a certain way, you know, that meets medical record standards. So a lot of people know that Nuance, there's a big position with Carl Icahn. He owns about 19% of the company. He added to his position in December, added 6.5 million shares. He owns like 59 million shares now. And he's underwater. He's lost some money in this, and the Bears have had a field day with Nuance. But the turnaround is coming because in late January they pre-announced, after a sort of a disastrous November where they warned and the stock gapped down to 13 bucks. January they come back out and say, you know what, we're actually going to do better than we thought. So they sort of raised guidance. They're going to report tonight, and analysts just started bumping estimates. So we're looking at a possible, if not a, you know, upturn in the earnings picture here, at least a slowdown, and that's why it moved to a rank 1 on some upward revisions. I would wait until they report tonight, see how things look. But it's potential that we put in a bottom here at $13, and it's held well above 15 here for now the past month. So, you know, we're looking at some good things. Last thing I wanted to mention is that, they got a new vice president of sales. If there's been criticism of the company, it's been about execution. So now they need some new leadership, and we'll see if this turns the tide for them.
Okay, tonight, February the 10th.
Correct.
Right, okay. I'm actually waiting for cars that can drive themselves. I don't know
That's
about
coming.
the rest of you guys, but I just want to sit in the back seat and just go to sleep. Nina, you're eyeing up some vehicle here that helps with low volatility stock focus.
Yes, it's iShares MSCI USA Minimum Volatility ETF. The ticker is USMv. Now, last year, the market had a very smooth run. The volatility was unusually low because I think investors just focused on QE because it was a massive support by the Fed, and they ignored all other earnings and other economic fundamentals. But this year, as QE will be slowly withdrawn, I think investors will look at every piece of information, including economic data and earnings. So volatility will be high this year. It's already been high so far, and I think this trend is going to continue. So it makes sense to focus on some of the products which have exhibited low volatility as a hedging mechanism in the portfolio. So this ETF starts with the broader MSCI index and then selects stocks which have exhibited lowest absolute volatility in the recent past. It has about 130 holdings, which it weights equally in the ETF. So stock-specific risk is quite low, charges a low expense ratio of 15 basis points, and has a nice 2.7% dividend yield. Now, these products, they will not perform very well in strong bull markets. Last year, the ETF returned about 25% compared to 29% for S&P 500. But when the volatility is high, then they outperform the broader market. And over long periods of time, they always beat the broader market in terms of risk-adjusted performance.
So bottom line, this vehicle might be what investors want to use to kind of hedge their volatility in their portfolio.
Exactly.
Okay. Is it a construction company? Is it a machinery company? We'll just call it an industrial company.
Yeah, Manitowoc, MTW, right. They're in a couple segments. They are not low volatility. This is a higher beta stock because they're an industrial. They're dependent on the overall economy. But they have about 62% of their sales come from cranes. The cranes you'll see on construction sites. About 38% in food service equipment, and it focuses on the commercial food service equipment. They have things like ranges, fridges, ice machines, beverage dispensers. And if you look, actually a majority of their operating profits come from the food service equipment sector because it's higher margin. And that was on display in the fourth quarter. They delivered a huge beat on January 30th, and that was because of solid top-line growth and margin expansion in food service equipment. Okay. So that drove a huge beat and prompted analysts to revise their estimates significantly higher for both 2014 and 2015, sent it to a Zacks rank of 1, which is a strong buy rating. And if you look at current consensus estimates, analysts are expecting about 14% earnings growth this year, 25% growth next year. So good growth story. Again, that's predicated on an improving global economy. They expect mid to high single-digit revenue growth this year, but expanding profit margins. So this is definitely one to look at if you're at least modestly bullish on the global economy. They trade about 17 times forward earnings. That's in line with the industry average. So there's a lot to like here.
Do we have a Zacks rank on it?
It's a Zacks rank of 1.
Number 1.
Yeah.
All right.
Strong. Top 5%.
Thanks for that. And thank you for joining us as well. Don't forget, we always have other stock picks and stock picking strategies for you on our website, Zacks.com. If you're not there already, check it out. Meantime, with everyone here, I'm Terry Ruffalo.